We're using $40 billion of capital. We're benefiting the entire crypto economy and the conventional capital markets. Bitcoin represents the digital transformation of hundreds of trillions of dollars of capital in the world.
Right.
No one expected to see it, so they don't quite get
Right.
what it's going to be, except for the fact it's worth all the money in the world. Digital capital is the ability to move the money at the speed of light anywhere on Earth and program it on a computer. As people migrate their capital into this global monetary asset, that asset class is going to grow faster
Than the rest
than
of them.
equity, faster than gold. For me, the base case is 29% a year on average for 21 years. That gets you from where we are today to 13 million a coin.
MicroStrategy co-founder and Bitcoin bull Michael Saylor discusses his prediction for Bitcoin and what we can expect in the coming months after trillions begin to pour in. After the Bitcoin halving in 2024, which Saylor says marked the beginning of an absolute surge in price, as we've seen multiple all-time highs for Bitcoin. Bitcoin is sitting just above 101,100, up over 5% just in the last month. Saylor believes Bitcoin is about to make history, as we continue to witness one of the biggest price rises in the history of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially, and Saylor says everything is about to change.
Digital capital is what happens when your long-term store of value goes from a building or goes from a portfolio of stocks to a digital asset like Bitcoin. Bitcoin represents the digital transformation of hundreds of trillions of dollars of capital in the world.
Right.
No one expected to see it, so they don't quite get
Right.
what it's going to be, except for the fact it's worth all the money in the world. If you don't have a capital asset like Bitcoin, I can send billions or tens of billions of dollars to Africa. You can make billions. The money will just drain out of your capital structure because you're storing it in a currency which is collapsing faster than you can actually generate it. Well, imagine I have a 40-ton weight in my backyard. It's a sculpture. That's US dollars on the balance sheet. Imagine I take the 40-ton weight and I put it on a flywheel and I spin it 60 RPM. That's a turbine. Now imagine I extend the arm a bit and I get it to go 120 RPM and I plug it into a power plant. Now I've got a reactor. And so what MicroStrategy is doing is we're tapping in that volatility. We're using $40 billion of capital to capture the energy. We're powering our equity forward, and we're benefiting the entire crypto economy and the conventional capital markets. You've got one group of investors that want low volatility. They want a secure, comfortable ride, so we sell them a convertible bond. You've got other kinds of investors that want super high performance, the sports car. They're buying the equity. We borrow the money from the convertible bond market at 0% interest. We buy Bitcoin, we lever up the equity, so the equity outperforms Bitcoin, and that's great for equity investors. And for the bond investors, they can't stand the equity risk, they don't want the downside risk, but they have a huge appetite for the bonds. One group of people would be long Bitcoin investors. They're going to buy the bonds because they get the upside of Bitcoin without the downside. Another group of investors are convertible arbitragers. They actually buy the bond, short the stock, extract sort of a risk-free premium out of the instrument, and they can only do that with a convertible bond. They can't do it with equity, and they can't do it with Bitcoin. Public companies exist to issue securities. So some fixed income investors, they want a guaranteed coupon, or they want low risk, and they want to participate without the volatility. Others want to make an investment. If you want to invest in New York City, you can either buy the real estate or you can invest in a company that borrows a lot of money to develop 10 times as much real estate. So we're offering investors whatever degree of risk and performance they want. And there's hundreds of trillions of dollars in the capital market that absolutely has to buy a security, and they cannot buy the commodity.
Right.
So we're serving their need. The point is, I got $100 million in New York City and I buy a building. I got to worry about someone slipping and falling on the sidewalk and a property tax. But if I can snap my fingers and teleport the building to Zambia, Central Africa, or to Monaco, all of a sudden It's a teleportable building. And of course, if I don't have any tenants in the building, I don't got to worry about them defaulting.
Right,
so
right.
digital capital is the ability to move the money at the speed of light anywhere on Earth and program it on a computer. There's a lot of people that are going to want that rather than having, pick a country in Africa where you want to invest your life savings in a building.
Right.
Forever.
Yeah.
And what happens if the government fails? You lose everything.
Exactly.
But if you could put the building in your pocket and go to the place where you like the government, maybe you get to keep your money.
Embracing an unyielding enthusiasm for the Bitcoin realm, Saylor confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Saylor reassures that a long-expected surge awaits as we head into 2025.
The wealth in the entire world is growing because of innovation, because of technology, but also because of inflation. And people are thinking to sell their Central African real estate to buy Bitcoin, or sell their Siberian natural gas to buy Bitcoin, or sell their Argentine currency to buy Bitcoin. So as people migrate their capital into this global monetary asset, that asset class is going to grow faster than equity, faster than gold. When you crank in the growth rate, which for me, the base case is 29% a year on average for 21 years, that gets you from where we are today to 13 million a coin in the year 2045. Bitcoin is a protocol for prosperity. Fire, electricity, steel, English, mathematics, you would give them to the world. Bitcoin is an economic protocol. Once you master Bitcoin, you can figure out how to save your wealth, how to economically prosper. It works for a country, a company, a family, an individual. Nobody owns it. It's a utilitarian, egalitarian entitlement, just a good for the world. That's why I'm so enthusiastic. I think you've got to keep in mind money bifurcates into currency, the medium of exchange, of which the dollar is the world reserve currency, and capital, the store of value, of which right now real estate and equity portfolios are the world reserve capital. Bitcoin is emerging to compete with equity and real estate as world reserve capital. But those Africans, they can't buy real estate in the US. They can't buy equity in the New York Stock Exchange. It's global capital. And once you understand that, you realize that every nation that respects property rights is going to support Bitcoin. They're going to expropriate your property, but any place where people respect property rights and they give you a chance for capitalism and freedom, they're going to allow you to have Bitcoin. And the competitor really is, the Vanguard 500 is going to get demonetized a little bit, and then instead of buying a real estate portfolio and a third apartment, you buy some Bitcoin, and I don't think that's threatening to anybody. I think having lived through all the difficulties of my 30 years in business, when I got to the point where I saw Bitcoin, I realized it's everybody working themselves to death as hard as they can, and they can't get ahead.
Yeah.
And that's because you're trying to do too much, but you don't have the right savings technology. And so Bitcoin was that way out. Well, I think there are a lot of successful, well-known people that just don't understand digital capital. I mean, there were successful people running Kodak. There's successful people running Xerox, and there are successful people that didn't care for the automobile or electricity. I think another decade and they'll start to appreciate it. But right now, you're going to have a lot of rich, famous people that are skeptical until they put in the 100 hours to learn about Bitcoin. But what I would say about Bitcoin, which is just wonderful, is if you accumulate a lot of wealth in Bitcoin and you just burn the keys when you leave, you're making a pro rata contribution to everybody that owns Bitcoin in the world based upon their contribution and their knowledge of Bitcoin. So I think that supporting Bitcoin as a protocol for prosperity is just a great thing to do. And otherwise, I think, take the Bitcoin with you.
Yeah. Saylor challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Saylor highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?